Hey, good morning. It's Jeremy here with the Guillette Group, and today we're going to be doing a market update. It's April 2022, and we've had a lot of questions asking about interest rates, asking about is the market cooling off? Have we hit the top? Stay tuned and check it out. So this is the Live Joy Southwest Florida channel. We talk about all things real estate in Southwest Florida and living in Southwest Florida. And we're getting ready to hop on the boat, but I wanted to get this update to you. It's kind of important. There's been a lot of questions again, just in the last couple of weeks from our buyers and from our sellers. What's the market doing? So we're going to dive into it. I'm a believer that evidence defeats doubt. I'm going to show you some data so we can really dig in a little bit and better understand what exactly our market is doing. So the first thing I want to talk about is there's kind of some mixed signals in the market right now.
I'm getting so many mixed signals.
I'm going to put up an infographic here, and I want to show a couple things, and then I'm going to pull some data. What I'm going to pull is just the past 7 days, but I'm going to refer to different pieces of both of these data sets or information to help you understand what and how we might be interpreting this market. Okay, so this infographic that I just pulled up compares March of this past year versus March of 2021. And the first thing you might notice is that sales or closed sales are down 39% year over year. That's interesting, right? I mean, how can our market be the way that we are and our sales are down 39%? Well, the simple answer is we are so short on inventory. It has never been like this before. I mean, we keep saying it, sure, it's been this way for the last year, but it's never been this way before in history where we have so little inventory to sell. Again, an average market has about 6 months of inventory. We're measuring inventory in Southwest Florida still in weeks, and we're sitting at about 1.5 weeks currently. Now, again, talking about mixed signals, if there's any good news in this, the new listings year over year are up about 8%. So, is there some relief in sight? Only time will tell. This is somewhat expected. We're beginning to see our snowbirds head back north. This is something that we see usually in that March-April timeframe. As they're going back north, there's oftentimes people are considering selling and new listings hit the market. This year, I think there's some people that are going to try to take advantage of where we are in the market. So maybe we're seeing a little bit of a lift versus last year of new inventory coming to market. The last section on this infographic, and I think it's important, it talks about our average homes for sale is down 32%. What does that do in the price? Well, think about the demand and supply equation. If there's very little supply and there's a lot of demand, it's going to drive the price, and hence why you're seeing such a significant increase year over year. And quite honestly, it's almost 2 years running at this point. Okay, so let's talk about interest rates. This is something that's on the top of everybody's mind, whether you're a finance buyer or whether you're not. If you're a seller, you're thinking about it. So at the end of last year, and again, there's no crystal ball.
Show me, oh magic crystal ball.
But at the end of last year, the chief economists, whether it was NAR, Zillow, Realtor.com, you name it, CoreLogic, there's a bunch of them. Everyone was predicting that the mortgage interest rates at the end of 2022, so December of 2022, would be in the ballpark of 4.5%. This year, we started at about 3.5%, and as you guys know, about a month ago now, there was a shockwave sent by the chief, Powell, when he was looking at inflation and how do we start to take control. Everyone was expecting that the mortgage rates were going to start to climb. Everybody expected a 1/4 point. The shock hit when he decided to go 1/2 point and announced in that same day that there's going to be 6 more quarterly increases to help stem the rate of inflation, which is the highest it's been in 40 years. So we don't anticipate that that's going to change. Now, what has this done to the market? Again, we started at 3.5%. The week of April 9th, I believe it was, we hit 5.25%. In about 90 days, we went up almost 2 whole percentage points. That is a drastic reduction in buying power. So if you're a buyer, your price point might have just dropped $100,000, $200,000 because of this increase in rate. And if you're a seller, what's the ripple effect? If there's less buying power, is that going to put more pressure where we are in the market? It's too soon to tell, and right now, there's no indication that we're slowing down. My personal belief, there's going to be a ripple effect as it relates to these interest rates. So again, chief economists expected we'd be at 4.5%. We're at 5.25% a week ago. It has come back down a little bit, so maybe there was an overreaction initially to the Fed. We're sitting at about 5% right now, but again, there's 6 more planned rate hikes. As those happen, buying power gets decreased. Will there be an effect on the market? I think so. So this next graphic that I'm putting up, and I look at this every Monday. I looked at it this morning just for the purposes of helping with this content and pulling up for this video. A couple of things that are noteworthy in this data. The first being the number of closed sales versus the number of new listings is almost equal. For the past year, the number of closes has just far beyond surpassed the number of new listings. Again, that's put a lot of pressure. It's driven down exceptionally low inventory, and it's what's created this really, really strong seller's market. This week, we're seeing that it's almost equal. Now, we got to get to the point where there's new listings versus the number of closes before we see a lift in inventory. But it hasn't been this close in a really long time. So is that a signal that we need to be watching for? Now, the next one I look at in this case is the pendings. And the pendings are still running about 1.5 times the number of new listings. Now, not all pendings make it to closings, but that's a pretty good indicator that we're still seeing just the crushing demand that we're experiencing here in Southwest Florida. If the pendings continue this way, we're not going to catch up with the new listings to then give us the inventory that we need. And trust me, we need inventory.
We need inventory.
The third piece of data that I pull from this, and I've been watching this now for 3 consecutive weeks, the number of price decreases has been over 350 each of the last 3 weeks, with this week being 374. Now, what does that tell me? I don't think it shows us a softening in the market, but what I do think it shows us, we've been testing the limit. If something was to sell for $750 and the next house that comes on the market, it goes on at $775. It might go on at $800. This push to find the ceiling has been going now for a year, almost 2 years. Maybe this is suggesting to us that we're beginning to find the ceiling. I think between the rising interest rates and just this velocity that we've had, 26% year-over-year growth in price appreciation, 31%. I mean, the numbers are staggering depending on condo versus single-family home, Estero versus Bonita versus Naples, etc. But it has been just a staggering ascent in price. I would suggest to you, based on what we've seen the last 3 weeks, I think we've been testing the limits and the market's beginning to tell us you might have found it. So what does this all mean? You know what it means? Not much has changed. But a lot has changed. So again, it's back to the mixed signals. Nobody has the crystal ball. I'm anticipating we're going to continue to see just huge demand. Randomly yesterday, I was in a friend's shop, the golf guys, and I bumped into a guy that's been watching our videos for quite a while, and he said something profound. It's something that we hear all the time. His job went remote, so he had the ability to go from North Dakota to come to Southwest Florida, get a head start, live the lifestyle that many of you are looking for. So demand is going to remain high. Inventory continues to be a problem, but there are some suggestions between the price reductions, new inventory coming to market.
Interest rates fluctuate. Who knows?
Maybe we're beginning to see a ceiling. So, I don't think we're going to see a dip in Southwest Florida, but I think we'll start to see a flattening with respect to the appreciation of home prices. As a seller, that might mean now's the time to hit the market. As a buyer, it just means, hopefully, maybe there'll be some more inventory. Hopefully you won't have to make decisions under such duress. That hasn't been the case. We were with buyers this week out on Cape Coral. Both of the properties that we previewed went pending in less than 24 hours. All right, well, that was quick. It was down and dirty. Just giving you the latest again. Evidence and data defeats doubt. I wanted to share with you some of the facts that we're seeing within the marketplace. And this was kind of fun. Yesterday, we were a little bit early to a dinner. So we drove around the Hyatt. We were checking out the new residences that are planned for the Ritz. They're going to be amazing. And while we were there, I was showing the kids the beach club access for Pelican Landing. Yes, it has its own water taxi. There's ferry boats that bring you out to their private beach. It's an island on the Gulf of Mexico. check it out. If you're curious about the community, make sure you watch our video on Pelican Landing. Leave a comment below. If there's something that you want to know about specifically and we're not covering it, drop it in the comments. We'll make sure that we touch on it in one of the future videos.